Hello, everyone. Hello, my fellow DJs in Nigeria, everywhere in Nigeria, Lagos, Abuja, Port Harcourt, Delta, everywhere you are, Ogun State, my fellow DJs in Benin, in Ghana. How are you? My name is DJ Skibidi, and I am your tutor on trading. Yeah, so in this video, I will be uh, teaching you, or we'll be talking about frequently asked questions concerning take profit and stop loss. I asked you guys on WhatsApp to share with me what you want me to talk about, and then you said you want to understand how stop loss and take profit work in trading. In trading here, we're talking about Forex and crypto trading and stock trading and shares trading. Any trading you're doing that involves using platforms online, you need to understand what take profit and stop loss is all about, right? So let's let's get to that in this video. So the first question I will be answering is, what is a stop loss in trading? What is a stop loss in trading? In a very simple form, a stop loss is a setting done when you are trading or before you pick a trade or even in the middle of a trade that automatically closes your trade when the market goes against you, so you don't lose too much money. Technically, it is an order placed with your broker to exit a position at a predefined price level, limiting your loss. Yeah, so that is what stop loss is in trading. So let's get the another question I have to answer here is, what is take profit in trading? So when you pick a trade, a buy or a sell, and the trade is going in the direction of what you have picked, there is the option to take profit at a certain level of profit. Normally, due to greed, many of us leave our trades to just run, thinking that we have control of the market, and that trade will continue to make profit. And because people want to turn $10 to $1 million, and then they just leave the trade and all of that, not knowing that there is what they call reversal. And then when reversal comes, all that profit that you've accumulated, if you do not take your own profit and go away, that reversal can come and wipe all your profits away and put you back into the red. Do you understand? So a take profit automatically closes your trade when the market moves in your favor, so you secure your profit. It is an order set to exit at the target price, ensuring profits are locked in before the market reverses. I said that. So let's go to the third question here is, why should I use stop loss and take profit? It is very simple. People don't know why stop loss and trade profits exist. So and then they find it really difficult. Some people don't even understand how to set it, maybe the lots, the pips, and all of that. So the reason why you should use stop loss and take profit is to protect your money and avoid emotional trading. Yes, protect your money and avoid emotional trading. So people, when they see the market is in a direction, they feel that okay, maybe they just see somebody that posted something on status and said, "Oh, this market will go well," or "This market will not go well," and people will go and begin to pick nonsense. So the stop loss and take profit saves you that stress. So if you're also a busy person, with stop loss and take profit, you don't have to sit on the computer 24/7. Just set your stuff and go and attend to your activity and let the trading handle itself. So the stop loss and take profit enforces discipline, it manages risk, and it improves consistency by preventing greed and fear from controlling trades. Yeah, so the first question I'll be answering is, how do I decide where to place my stop loss? Now, The simple form is that when you pick a trade, and this is the trade, right? And this is your, so when you pick a trade, use the ratio 1 to 2. When you pick a trade, set a particular portion, for reasonable portion, for the take profit. Do not wait for it to get all up there. So set a particular percentage for the take profit. Do you understand? So that, okay, maybe you put in $10, you can set take profit for $2 or for $3 or for $5 or even for $10, depending on you. So if you're trading with $100, you can set take profit for $5, $10, $20, $50, $1,000. It is you who will determine that, as much as you know what you are doing. Do you understand? So you place it at a level where you are happy with the profits before the market can reverse. Many traders use a risk reward ratio of 1 to 2, Fibonacci levels or major resistance support zones to set take profit. Question number 6. How can I change my stop loss or take profit after entering a trade? It is very simple. Using your mouse, I will try and do some practical and place on the channel. Using your mouse, you can move them if market conditions change, but avoid doing it based on emotions. Adjustments are common in strategies like trailing stop losses, which move your stop loss in the direction of profit. What happens if you don't use a stop loss? This is a very critical question. If you don't use a stop loss, you can lose your entire account if the market goes against you. And the market is a respecter of nobody. So without stop loss, your risk margin cause an account wipeout, especially when using leverage. And virtually all trading platforms use leverage. Do you understand? So number 8, should my take profit be bigger than my stop loss? Yes, aim for bigger profit potential than loss. A healthy risk to reward ratio is 1 to 2, or better, risking $10 to make $20. This ensures long-term profitability. Question number 9. Do professional traders always use stop loss and take profit? Yes. They never trade without them. It is an automatic set. Like it is something that is a prerequisite when they are picking trades. There's a stop loss, there's a take profit, and when the market goes the stop loss route, they do not trade again that day to avoid revenge trading and personal trading. They wait till the next day with a clear head, see the market, and then pick the next direction. What is a trailing stop loss? This is the last question that I'll be answering right here. A stop loss that moves along with the price as it goes in your favor. So it locks in profit by trailing the market price at a set distance, 20 pips behind current price. So every time so what happens is, if the profit is coming up, coming up, coming up, coming up, you are saying, okay, if it comes down by 20%, pick stop, set a stop loss, meaning that you won't lose because it is already profitable, but you may also miss out from the extra. Maybe that's a tiny reversal and it's coming bouncing back. You may also miss out from those extras, right? But basically, missing out from the extra is not the issue. The issue here is that you should trade using these rules so that you do not burn your hard-earned money. Do you understand? So you don't burn your hard-earned money, right? So using take profit, stop loss plus stop loss together is like having a seat belt and an airbag in your car. One protects your money from losses, the other secures your profit, right? So this is all I'll be sharing with you based on this topic. I hope you learned one or two. You can send me a WhatsApp message if you want to learn more, or join our Telegram, Instagram channel for more videos and more information that we share concerning the stuff. Mind you, trade at your own risk. Know before you do anything as far as trading is concerned. Thank you, as I'm seeing you in another video. Bye.